Hey everyone, this is Ben with the All in the Reflexes Substack. You can find me at this link for my Substack and QR code to all my other links. You can also find me on X. I post random charts and more real-time things throughout the week, and I probably post charts on there almost every day if anybody's interested in seeing more. So just wanted to do a quick video. I haven't done one in a little bit, but I see some interesting opportunities in uranium that I'm might pursue, and I thought I would do an overview of like how I see them, what I would look for scenarios to play out, and some different ideas in that space. But I want to emphasize that nothing that I share here is specific financial or trading advice. Nothing's tailored to anybody's specific account. These are just ideas that I identify and try to keep track of in writing and in videos so that I can track my own progress. But everybody's got to manage their risk tolerance themselves, and but as we share ideas together, we get stronger. And if you guys have questions, that helps me as well. So let's take a look at uranium and why I think that's a decent opportunity, potentially in the short term. So I start with really like TradingView's Pine Screener, so I can take a custom coded indicator, and this one's got the main technical screening that I like to use, breakouts, RSI, crossovers, on balance volume, high and tight flags. I use all kinds of different things, but this is one that I like a lot because I'm looking for a rising 5-day moving average. So it's rising in each of the 5 days. It's obviously very short term, but when you're looking for a rising 5-day moving average that's rising with that much conviction, then we have an opportunity to buy into strength. And if you have a declining 5-day, then we know that we're always buying into potentially the early part of a downtrend. So I like the rising 5-day for additions to new positions. I'm screening for relative strength, and so this is relative strength to the S&P, and it's looking for the situations where we've got positive relative strength to the S&P, and that positive relative strength is rising and above a rising moving average. So this is a show of strength for relative strength, and then this last one is we'll look at this on some of the charts together, but it's looking for one of two situations: either the volatility normalized MACD, and it's using a faster MACD than standard. It's looking for that to have crossed, had a positive crossover from negative to positive, or it's looking for it to be positive while Elder's Force Index has made a crossover from positive to negative. So either MACD is crossing over while Force Index is already positive, or vice versa, Force Index is crossing over while MACD is already positive. And we'll look at Elder's Force Index. It's a bit noisy, but it's a volume-based indicator, and you tend to see your strongest movements early on into changes, and then like a lot of momentum indicators, it as the trend continues, it starts to develop a divergence. Sometimes you get the opposite. You get like a smaller move early on, and so that's why it's good to work with them both together. But so running this screener, we only get 6 names, and I've got a watch list that's probably about 1,000 things, different stocks, cryptos, multiple sector ETFs, bonds and forex and things. So I like screeners like this that show us some a really small subset of some interesting ideas. And in this one, we've got a couple of well-known AI names in the chip space. You've got AMD, Taiwan Semi. I won't touch on those because there's already a lot of coverage for AI. Gets a lot of airplay. And then you've got emerging market. But it's interesting to me that we've got 3 uranium names popping up on this screen at once. You've got the junior miners, the miners, and an individual name in energy. This is one. We talked about this in Margot's group, where she covers financial astrology, and does a lot of coverage across markets, including commodities. We talked a little bit back and forth about uranium in that space. I know this is a name that she likes and follows. She also likes SRUUF, which is the spot uranium ETF, and I tend to forget that one is the one that is most tied to the underlying commodity. So anyways, this is how we screen for them, and the ideas that look interesting. Next, let's take a quick look at relative rotation. So we'll start with weekly, and so this relative rotation graph, the center point is the S&P, and it's taking all of these sector ETFs, dividing them by the S&P. On the left-hand side, you've got momentum. So this is, I'm sorry, we'll start with the bottom. So the bottom is your relative strength to the S&P. Above 100 means it's stronger. It's stronger relative to the S&P. And on the left-hand side, left axis, you've got momentum of relative strength. And so above 100 means it's got strong momentum of relative strength versus the lower half, which is weak momentum of relative strength. And so for something to be in the leading category, it has to have strong momentum and strong, and hold relative strength to the S&P. And so you've got three sectors that have done very, very well in the last 2 to 6 months. You've got healthcare's had a nice recent push over the last couple of months. Gold obviously has been huge this year, and biotech's had a really great showing at the end of 2025. These are all in the leading category, but they're steeply declining, right? So these they tend to kind of move in a circular fashion. You've got staples, materials, financials, energy, industrials, like all pushing into improving. But what's important with these is to see the tails, and the tails are not very compelling in some of the ones in the improving space. The longer the tail, the more conviction there is behind the movement. And another thing that's important to look at with relative rotation is multiple time frames. So we're starting with weekly, and then we want to see if the trend on the daily is accelerating or potentially reversing. And so before we leave the weekly, we'll take one look at that uranium name. So here's spot uranium, SRUUF, and it's the only one that's doing this, right? It's coming from the weakening, and then it's making a really, really kind of explicit or deliberate, or strong, about face, right? And it's making a reversal, and it looks like it's almost going to come directly into leading, and that's on the weekly. So now let's take a look at it on the daily. And so daily changes on the relative rotation are going to be noisier, but these are a little bit better for execution for me, and so you've got some things that are notable. Gold's got this about face in the leading section, and then a long tail down into weakening. Housing, consumer staples, these are driving right down into lagging with a lot of conviction. And then the longest tail that we have is uranium, and it's moving just very strongly into the upper right hand corner of the leading quadrant. So this is we saw the about face on the weekly, and now we've got this very strong movement on the daily, and that tells us that this is an area to dive further into. So let's take a look at that Elders Force Index and MACD combo. So here's the MACD. And then on the bottom, you've got Elders Force Index. MACD, I'm using a fast MACD. So this is, your standard MACD is going to use 12, 26, and 9. This one is going to use an early entry configuration where it's 8, 17, and 9 for the signal. So and the difference with a MACD V versus a standard MACD is this is going to normalize everything in the MACD by the ATR of the slowest setting. So in this case, it's going to use a 17 period ATR, which is your volatility measure, average true range, and so it's going to normalize the MACD for that. And what that does is, like on a standard MACD, you'd get some really shallow movement back here, and then your largest movement up front. It lets you look at the entire time series of the price history, and then it's it's a bit more responsive because it's taking into account the range of movement in the dollar range per day, averaged over those 18 periods, along with the direction of its moving averages at the same time. So when we look at the spot uranium ETF, we've got this positive crossover in the MACD back here in the early part of December. We had a positive crossover in the force index, even though these aren't very large volume movements like what we saw back here in June, when we were going into a peak in uranium at that period, going into like a high and then a consolidation. We actually got like a little 5-wave movement up, like a 1, 2, 3, 4, and then 5, and then into a consolidation. So other things we want to take a look at on this chart, we've got 2 moving average lines. We've actually got 3. So you've got a reverse RSI, and so this is a reverse calculation that tells us what price level we would have to be at to be at a 50 at the midpoint of relative strength index. And so this is RSI, the indicator, not relative strength to the S&P. This is relative strength, the momentum indicator, to its own price. So it's what price level it would have to be at a 50 in the RSI. And the first one is going to use a 65 period RSI, and I'm also showing a 33 period moving average with it. And so that's the dotted one. And then we've got a 14 period RSI. I like these because the color changes when they go negative to positive, at least sloped, and they do act as moving average lines, even though they're calculated in a different fashion. So this tells us, what direction momentum is heading in relative to price, and then you've got your momentum and trend indicators with the MACD and force index. Then on the very right-hand side, we've got the volume profile, and the midpoint, the strongest, densest area in the volume profile. This is the volume of trades that you've had at each one of these price levels for the history that we see on the chart itself. And that line is called the point of control. This is usually an area of strong support or resistance, and you can see price comes down and retests this multiple times. That's how that history is built back here in July before it breaks above, and then it starts to build another one that we've just broken above. Now we'll turn the drawings back on, and I've only got a few, so we'll turn the RSIs off, and we've got an anchored VWAP to the very low in April 2025, one to the all-time high in, I'm pretty sure this is the all-time high. Nope, it's not the all-time high. So we've got one anchored to the high in September of 25. Just for fun, we'll put one on the all-time high. I like to use red from the highs. So when we look at the anchored VWAP, you get the reason it's important to put these anchored volume weighted averages on our all-time highs is because you get a break above tells us we're starting to reclaim the trend, and then if it doesn't hold, that's a bearish signal, and you can see that in 2024 led to this massive drawdown into the lows in April of 25. You come back up and you reject at it. We had a really nice, this 5-wave uptrend comes up, breaks above it, and then rejects, but it finds support at the anchored volume weighted average from the low, and so that is like a squeezing condition where you've got sellers trying to cut their losses. They bought in at prior highs, and so they're running at a loss from this prior level at all-time high, and they're looking to get out when trend gets up and touches this trend line. The buyers that are in profit were adding to their positions as it came down to test this anchored VWAP from the April low, and then we can see that it comes down and it wicks way below it. So this is like a shakeout move before it goes on to break out of this descending trend line. So we'll hide the one from all-time high just to try not to confuse ourselves too much. And we've got a anchored VWAP from the September high, a descending trend line, and we can see we've broken above the anchored VWAP from the April low. We can anchor a new one to the the November 21st low, and this is the one that I would want to see hold this support. So you've got both of these, the one from the the September high, and from the November low. pinching together, and those are, we're going to need to see those act as strong support. So we don't want to see price close below them. Otherwise, that will suggest that the uptrend in uranium is at risk. So that's our breakout in uranium. Now, when we break out of a descending trend line like this, we tend to see ourselves revisit price. So you might do something like this. You might even do it a couple of times, and then we go on to to new all-time highs. And those new all-time highs tend to be proportional to to the height of the move into the descending pattern. So if we were to take this this $4 range, this 25% move where it breaks from the consolidation pattern into the high, and then it puts in its descending pattern, we could forecast a potential high of this move to come in around like 23.30, right? And so 70% of the time breaks from these descending lines are retested. They aren't always, but I would look for it to retest close to that descending line, or maybe close to one of the AVWAPs, and then start to march higher. So that's the spot uranium ETF itself. Now, the ones that were on the screener were the miner, right? And we've got something very similar going on with the miner. So these are going to look very, very similar. We've got a reverse RSI, and it's breaking above, squeezed in between the 65 period reverse RSI, and then gapping above both, putting in its consolidation, going on to its new high, and now we've got this descending consolidation pattern where it's it's putting in lower highs and higher lows. So now we have a break above. We're just now, so the spot uranium has already broken above the descending line. It's had several closes above it, and it's starting to retest, right? And the miners are going to typically lag the underlying commodity and then show us a move that's relatively higher beta, so a more extreme at the highs and lows type of movement than the underlying commodity itself once it gets going. So it's going to lag and then probably have a more extreme move higher. So if we were to forecast this in a similar fashion, we'll take a strong bar into the high of the move, and that's a 32% and $16 movement. And then if we take that from the location of the breakout, that would forecast our new all-time high like around like 73 to 74. So not a it's a forecast, right? But this is a scenario that we see hit commonly. Now another phrase that we try to remember is that failed bullish moves become strong bearish moves, and should this move fail, we would then use that same proportional forecast. So let's say it gets, we break above, get a little retest, and then instead of finding support at the AVWAPs and the breakout from the descending line, let's say that move fails, then we would take the height of the breakout and use the reverse of that move as a forecast for a move down. And so that's how we prepare for more than one scenario. So if we don't see the full forecast of the bullish move and it reverses, then our target for a drawdown is going to be between the AVWAP from the April low and this point of control is aligning to a percentage forecast from a breakout. And that's not to say that I think it would, if there's a failure, that I think it would specifically be there. But in this example, that's the kind of confluence that I would look for when forecasting a range for a downside move. So the nice thing about this is, we can see that there's potentially two opportunities to play a breakout like this. We either have the full bullish forecast or a failure, and then we can either short or buy puts, and then target that area to take profit on those. So that's the miners, and then we'll look at the other was the junior miners, and junior miners tend to have an even higher beta movement to the underlying commodity than the regular miners, and we've seen that with gold and with the junior miners for gold and the junior miners for silver throughout 2025. And so these ones have very similar pattern to what we just saw with the uranium miners. They just now breaking above the AVWAP from the October high, and we've got two tests of support at the AVWAP from the April low. We've got our break above on the force index, and this one is a much more compelling breakout on the force index. This is a very large volume into these junior miners. And then we're just now getting above zero on the volatility normalized MACD, well above the point of control on the volume profile. And if we take a forecast from the strong bar to the height of the move in October and use that as our forecast, that would call for potentially a move around like 37 to 38. And again, probably you're going to see see a retest of support, maybe even again at a dense area in the volume profile, and then ideally a march forward to a new high, and this actually would form like a basing pattern on this measured move. So if it were to put in like a higher pattern up here, that could even lead to kind of like a cup correction, and then eventually move higher. So and those those are just different scenarios that we just look for once we're getting comfortable with the way an asset is moving, and look for them to play out over and over time. So let's take a look at a couple of the individual names. We mentioned the other one that came up on the screener was UUUU, Energy Fuels. And we'll look at the reverse RSI. So this one's had a pretty nice squeeze in between the descending 14-day RSI, reverse RSI, and it's finding support at the 65 period. And then we'll take our descending trend line. This one's a little bit steeper. We can make a case for this actually already being a break from one, though that's a very steep descending line. Let's work with the anchored VWAPs. We'll put one on the high, and it has not broken above that one yet. And then we take one from, I'd like to stick with one from the low. So there's the one from our low. And so we've retested the one from the low, and this one's not yet tested the one from our October high. We've got a more gradual movement in the volatility normalized MACD. It's just crossing positive, and we've got a couple of bullish moves above on the force index, but we haven't seen this is more of an exhaustive volume movement into this prior high. But we would like to see some inclining volume like we saw back here in the July timeframe. With maybe even a little bit of a shakeout to tell us that we're headed for a steeper move. But I like this name, and this is one I'm going to keep an eye on. One that I've got in our long-term portfolio, I'll probably do some more work with this one. I'll look to add to our core position, and maybe do some options plays with it as well as Cameco. And what I like here is this one, we've got the anchored volume weighted average from April. It's come up and it's never retested it, but we've already got the breakout from the anchored volume weighted average from the all-time high, and we've got the breakout from the anchored weighted average, or the descending trend line. The reverse RSI, the 14 period one, is ascending. The 65 period was tested as support back in November 21st, and that one has remained ascending and above its anchored moving average. So this one's showing like a bit more strength. Again, we don't have a real compelling move on the force index yet, but that's okay if it's we've got positive volume and a positive trend. Some of these large movements are a bit more exhaustive and cautionary. So that's CCJ. Now we'll take a different spin on a couple of these. And let's take a look at the point and figure charts. I'm big on cycles and seasonality, so it's important for me to also look at point and figure charts that look at trend independent from time. And so this just tells us, how strong is this move, and is it exhaustive from a standpoint of consecutive equal increments of dollar movement. And in this case, I've got them, is my preference for running a point and figure chart. I use 1 percentage box, 1% price movement per box, and I consider 3 boxes in a row to be a reversal. I like to use the automated reversal markers and trend lines, and I color code the columns just to make it easier to visually scan a bunch of these at once. So we'll look at the uranium ETF, the spot uranium ETF first, and this is an ascending triple top. That's a very strong bullish pattern. I like the way that stockcharts.com does pattern recognition. It makes it easy on us. And its reversal marker is telling us that if we were to see price close below $19.24, that would be considered a failure of this bullish move. So spot uranium looks strong with a strong pattern. Take a look at the miners, and this is a double top. This is also a strong pattern. These tend to be stronger in the short term. Does not have a reversal marker identified. I would consider a move below 57.50 to invalidate this bullish double top. And then we'll take a look at the juniors, a double top pattern as well. I would consider probably below 26.72 to be an invalidation point, just using point and figure alone. Take a look at UUUU, so energy fuels. Now, the funny thing with using percentage is, like, if we were to use, traditional or dynamic ATR, you get a much smaller chart. You get, it's just visually easier to work with. I prefer to just stick with percentage, so it's not dynamic, they're all measured the same way, but occasionally you get like a really tall chart like this. The pattern detection is still very helpful, and you can still see that a move below, your breakout is going to be the failure point, and so anything below about 1609 to 1590 is going to be a warning for us that that we won't have a short-term continuation of a trend, and likely like a secondary pullback. But CCJ Cameco. This is, again, an ascending triple top, one of my favorites to play. The double tops are bullish, but breakouts from a triple tend to be good for position management traders, which is more of what I am. I like to, even my short-term positions, I like to hold for a couple of months, and I find that triple top breakouts, especially if they have a strong directional index measure, those tend to do it tend to be more successful in my 2-month long trades. So CCJ has this triple top. I would say probably a move below like 95.50 would be the invalidation signal, purely on a point and figure chart. We'll take one. Let's just take a fundamental look briefly. So you've got. This is why I like CCJ. You've got a larger market cap, so this is still a mid-sized company, but some of the others in the uranium energy space, they're smaller cap, between like 4 and 10 billion. CCJ is a bit larger, bit more price history with it. When we look at the valuation is high for most of these right now, because the uranium names have done so well, but this is likely to be an ongoing trend for us. The revenue growth, you can see why UEC and Energy Fuels have been popular names. This is a really steep revenue growth for these guys. Cameco has good double-digit revenue growth, but it's also got it's profitable with EBITDA growth and multiple years of profitability. So this is why this is a pick for us in our longer-term portfolio. I'm putting aside the fundamentals for a second. One last tool that I'll look at with you guys that's in my relatively new to my arsenal is the software by Timing Solutions, and they so this platform offers cycle detection, and I'm still learning it, so I'll be working with this one for a while, but I've run CCJ through this because it's got more history than some of the price ETFs, and this is our longer term play. So what it does cycle detection for us, and then we can select which ones we want to use and do some customization with them and optimization. But I'm using a composite of the annual and 10-year cycle along with the Venus synodic cycle in blue. So the green thin line is our annual composite of our annual and 10-year. We've got the Venus synodic cycle in blue, and then an economic cycle in red. And the economic cycle is a composite of a 1,050-day cycle and a 40-month cycle. So it's got two lengthier cycles for us. But starting back in 2023 now this cycle tool is maybe where this is very different than the point and figure charts. The point and figure charts tell us purely price movement, and we can do price forecasting with point and figure. Cycle chart of this nature, you see big amplitudes in these cycle moves, but it's not intended to help us forecast price, and it can be a little bit deceptive because you see price making a high around these cycle highs. But these turning points in the cycles are intended to help us anticipate pivots, and sometimes those pivots are a trend acceleration and not a reversal. So it can be a little bit sneaky on us, and you can see ones where the just the amplitude of the magnitude of movement in the cycle itself as we went from October 2023 to 2024 makes it look like we would have expected a big crash in price in CCJ, which we didn't see. We saw a swing low, a swing to a new all-time high, and then a swing low to support, and support at a prior price level. So this was actually like a really bullish retest of a support level, and if we were to interpret this as a magnitude of movement, it would have scared us a little bit, and that's going to be important because we've got a very similar relationship between these cycles in 2026. So we had the cycles called for us to have a pivot in the March timeframe, but then the overall slope of the annual and 10-year composite, the Venus synodic and economic cycle were positive, and they all came to like kind of a peak in a sequence where you've got Venus and then the composite price history and the economic together, and then we had price overshoot those cycles a little bit, and then we started to decline with the economic cycle afterward. But so those told us, that we were going to have a swing low, or to anticipate a swing low in between the end of 2023 and the early part of 2020, the end of 2022 and the early part of 2023, and that we were going to have a more sustained uptrend that was worth riding out. Then we get into 2024, and we see that the combination of these cycles has helped us anticipate some swing lows. The descending economic cycles, more of a warning that the moves into a high might be muted, and they have been. Then we get that low in April that coincides with with us making lows in the composite of the annual 10-year. It starts to lose some of the relationship with the Venus cycle. You've got well, actually no, it still follows it, right? You've got this swing low in the Venus cycle that then moves to a high. So it becomes a little bit more confusing on the Venus one, but the annual 10-year composite remained helpful. Now the way that the cycle detection works, I've excluded the most recent 6 months worth of data so that it's not skewing the results by the most recent data, and helping us to see if it telling us whether the cycle was helped us to accurately predict these remaining 6 months, and then using longer history to help us with the go forward. So, taking a look at our cycle for 2026, and this contradicts a little bit of what we saw in the charts earlier. So the charts look very bullish for our setup for the uranium miners and specifically for CCJ in the short term, but we've got what's calling for like a cycle pivot low in between the later part of January and the very early part of March. From just an equity standpoint, we typically see the January low the January high come in before the January low. So the January high would typically come in, around like the second week of January, and the low would come in between the 20th and the 25th. And that's very close to when it's calling for us to have a swing low on both the composite of the annual and 10-year and the Venus cycle, and then lagging behind that is the economic, which is much smoother trend line, or cycle line. So why is that important? It tells me that I probably want to pace myself on entries to the longer term holding and be prepared for the shorter term move to potentially be a shakeout with that retest of the lower AVWAP that we saw. That's why it's important to forecast the potential for a failed move as well as the potential for a successful move. But similar to 2023, we've got all three of these cycles rising together with a positive slope, and so if we do see that low, I want to be prepared to I don't want to give up on uranium. I want to be prepared to participate in it as we get to the end of the first quarter, and look for a much more sustained and longer term move throughout the remainder of the year. Potentially even multiple opportunities if it proves to be volatile throughout the year. So that's my thought on uranium. And if anybody has questions, ideas, anything that I didn't address clearly, or something that they'd like to see compared to these opportunities, feel free to either comment on the video on Substack or reach out to me on X or through any of the forums that I'm in. But always happy to answer questions, share ideas, and work together on these things. Thanks for watching, and have a great night.